Good morning, everybody. Welcome to the SMC Livestream episode 6. I hope you've all had a fantastic week so far. It's just going to be me today. Hein's busy. He's busy this morning. He's got a couple of webinars of his own. But yeah, I've got some really good value packed for you guys in today's stream. I first want to start off today's stream by starting with a mechanical framework that you can use to approach the way we approach three structure types here at Funded and also the SMC Livestream. Welcome everybody to the stream. We'll just give a chance for a couple of people to join, but welcome at Randolph Flaherty. Hi. At Frank, where have you been, man? I've been here on YouTube. We've been streaming really daily. Last week we didn't stream. We just had tons of technical issues with the internet being under maintenance and then also load shedding on top of that. So we eventually replaced the internet lines with brand new lines. Also got a UPS for the office here. So there will be no interruptions whatsoever. We'll continue with our daily streams. But yeah, really good to see you all. So what I really want to cover first in today's stream is, yes, it helps you all going through the chart markup, the way that we approach price action here, which is ultimately the mechanical framework, the framework of how price moves. So I've created a simple little sheet over here that will help you approach understanding the full context of price, a complete top-down, crystal clear understanding the intentions of price through a rule-based way that you can approach your markup every single morning. Okay, so first and foremost, what I've labeled out over here, the first thing that I want you to do each and every morning is just have a look at your weekly and your daily intention. This will give you just that extra context when hopping down onto the 4-hour and the M15 timeframes, so that you know you can expect where price needs to move. And ultimately, you can use your M15 as your confirmation to play out that higher time frame intention. Okay, so from the weekly and daily, hop onto the 4-hour, which will confirm your higher time frame intention. The M15, which is your internal time frame of your 4-hour, will be the confirmation of your 4-hour time frame, which will then ultimately allow you to tighten your risk to rewards when formulating your trade plan every single morning. So the M15 is ultimately the time frame that I spend 90% of my time on, but keeping in mind that whenever I'm on the M15, I always have the idea and context of what the higher time frame is doing. I'm already confused. Hi, Hein. This is Jay here. Hein is going to be joining again tomorrow morning. At Cody Ross, what are you confused about? Ultimately, that's why these streams are here. If there's any confusion, here to answer these questions for you and help you out in terms of the way that I'm approach the markets and ultimately mentoring you here. So what exactly is the confusion? Is it your time frames, the S&D, the structure types? Load your questions below. That's ultimately why I'm here, to help you as much as possible. Okay, so within then the M15 structural ranges, which is your confirmations of the 4-hour time frame, I'm going to hop onto a more visual example of this now, and then we'll go through our usual top-down markup analysis, putting that onto the live charts this morning. Okay, then your M1 and M5 time frame is all only for execution inside of your higher time frame M15 POIs. The structure on the M1 and the M5 is just far too noisy, far too aggressive, and by eliminating that, you will remove all of that noise that is happening on the M1 and the M5. Okay, and then one thing I also wanted to leave you with quickly before we hop onto the live charts is that no matter what strategy that you're trading, whether that's three structure types, retail, ITT, losses are going to happen. And I want you to understand that losses is the best thing that you can ever have. It's the only thing that is ever going to help you with trading. And that's why I wanted to start off today's stream also with this quote over here. Every trade that you execute under a rule set is a win regardless of the outcome. And I want you guys to remember that and take note of that. Okay, so without further ado, let's hop onto EU. EU has played out pretty much exactly as I wanted to see and as we discussed it in yesterday's stream. Okay, after the 4-hour break of structure with our previous strong low, we mitigated premium areas of supply. If we quickly just hop over to the daily to get context on that, regardless of all of this bullish momentum that has been happening really since the end of October to beginning of December now, so nearly the last 2 months. This has just been a bit of a daily pullback and daily correction. The overall bias of the daily is still, and the expectation is still, to continue targeting these weak lows. And how do we confirm the end of that pullback? Well, if you remember in one of the previous streams, and if you've also watched my ICT bootcamp and also my videos here on YouTube, and if you're a part of the private funded mentorship, those members will understand exactly what I'm talking about. Price will always move in the form of structural highs and lows. Let's use this as our daily time frame, for example. After every single break of structure, price will incur some kind of pullback phase, whether that's to S&D areas in the premium, S&D areas here or here, price will need to incur some kind of pullback. It does that to fulfill orders, collect orders in the markets where money lies. And that's ultimately how price moves. Price doesn't move in the idea of time, kill zones. It doesn't move just because it's summertime holiday now. Price is going to move exactly as per its rules, as per its algorithm. Maybe, yes, there's less people trading now in December, people going on holiday, people not trading. It will still continue with its rules, just with perhaps less volume. Okay, so that's exactly what we're busy seeing here on the daily time frame. If we have a look at our weekly, just to get that extra understanding of the daily, and then we'll move back to the 4 hour now, is most recently we've had our weekly break of structure, weekly strong highs. We've had now a bit of a weekly pullback, which was due after the break of structure. We confirm the weekly with our daily because the daily is the internal of the weekly time frame. So as soon as after that weekly break of structure, that daily starts to shift bullish, we can expect a bit of a larger pullback into at least the discount. All right, let me just use a fib tool over here. Discount, equilibrium, and premium. At least into the premium of this range in supply areas, potentially here or here or here. We don't know where price is going to pull back to, but we'll react to what price is doing once the internal time frame confirms so. Okay, so we've pulled back into areas of supply of the weekly time frame. The daily still remain bullish. The daily has now shifted bearish, indicating that there is good possibility that price has now finished with this overall weekly pullback and we're potentially ready to target these weekly weak lows to deeper mitigate and liquidate into the higher time frame monthly demand areas. Price doesn't know time, time doesn't know price. Ultimately, price follows where liquidity lies and where the orders lie in the market, regardless of the time. If it's December, price is still going to collect orders, sweep liquidity, and continue in the direction it's already going to go. Whether that's January, February, March, April, May, price will always follow those rules. So that's ultimately why these streams are here, is to help you slowly but surely click in understanding where the money lies in the market to help you and put you on the right side of price. Okay, so from the, just going to quickly delete these Koki pens again. There we go. All right, so after the daily has now shifted bearish, confirming this weekly pullback is now over. We can expect after a daily break of structure to the downside, all right, daily strong low, took out the weak high. Pullback, new strong low, took out the weak high. Price broke structure to the downside, which is what we can call our daily change of character, new daily strong highs, daily break, daily weak lows. So the expectation of order flow is to continue targeting these weak lows. As ICT would call it, these lows is our draw on liquidity. That's all a weak low ultimately is. It's your draw on liquidity and the expectation of price to target. Okay, so now that we've had that daily pullback, which was the expectation after the daily break, the 4 hour has now shifted bearish, confirming the end of this daily pullback, confirming price is now realigned with the daily and the overall weekly order flow. And we were discussing this yesterday. If this happens, price will potentially set up an amazing opportunity going into next year, where now that we've had that 4 hour break, as I've labeled over here, we can expect a bit of a 4 hour pullback, whether that's into supply here or here, to then let our M15 start confirming itself with its bearish order flow, where we can then start looking for our shorts in the premium in alignment with the 4 hour, the daily, and the weekly for a potential swing trade to potentially target those daily week lows, even potentially the overall weekly week lows, as everything is now realigned with itself. Okay, so this is something I'm going to be looking at, and my potential trade plan that I'll be looking at on EU going into the new year next year is I'd love to try and get involved on this swing trade, but again, we'll react to price as it goes along. On the 4-hour time frame, as I've labeled over here, yes, we've had the 4-hour break of structure to the downside. Okay, we're due for a bit of a 4-hour pullback, but in the interim, I will look to follow through off the 4-hour supplies until supply fails. We have that internal break to the upside, which will be our M15 swing, to confirm demand has taken over control for a bit of a larger pullback. Okay, so from the 4-hour, now we can head over to the M15. So before even looking at the lower time frames, we already know that any longs on this market is going to be either phase D or phase C, counter swing, and against the overall intention of the market. But there's nothing wrong with trading against the trend, understanding that it is 100% valid to wait for the right confirmations to start trading those pullbacks. So if the M15 starts to shift bullish, we get a bit of a pullback into demand, I get my 1-minute entry model, I will be 100% happy to look to ride a bit of that 4-hour pullback longs into deeper areas of supply, where I will then start looking for that M15 to start shifting bearish with our 1-minute model to then follow through those overall swing shorts. Okay, so this is a scenario, again, I would like to see play out within the next couple of months going into the new year. Just again, already, without looking at that lower time frame, we have that clear understanding of what we can expect from price. So again, I'll come back to the sheet over here. The first thing I do is I have a look at the weekly and the daily intentions. I don't focus too much on the weekly. That weekly is just really an extra to get a better understanding of why the daily is doing what it's doing. The 4-hour, which is your daily internal, will then confirm your pullbacks, the end of the pullbacks, to then continue daily pro trend, and your M15 then confirms your 4-hour, which will confirm the start of the 4-hour pullbacks, end of the 4-hour pullbacks, and to continue pro trend. And that's ultimately where the 3 structure types come from: the M15, the H4, and the daily. Those 3 mechanical timeframes, which is the only timeframes I focus on, and which is a part of my trade plan. So I won't look at the 1 hour or the 30 minutes or the 45 minutes. I always look from the weekly to the daily to the 4-hour to the M15, which rule-based is what we call the power of 30. So I think if you take your time frame, multiply that by 60, divide it by 30, that will give you the internal of that time frame. So the daily, which is 24 hours, if we times that by 60 and divide it by 30, or times it by 30 divided by 60, we get more or less, I think, 6 or 7 hour, which then I just refined to the 4-hour chart. And that's the mechanical rule on how I use these timeframes and how I've developed this mechanical structural framework into price. Okay, so yeah, going into session today, let me just quickly answer a few questions in chat here. Where do I find the definition of phase A to D? Go have a look at the ICT bootcamp. That's on my YouTube channel here. It's completely free. It's a free mentorship. I think it's video number 6 in that bootcamp that goes specifically over the phase A to D structural types and algorithm, mechanical algorithm of price. Also, there is a much deeper step-by-step chronological course in the private Discord that goes over it in far more detail, including backtesting sessions, the live streams that happen privately with the members there. And there is also a 40% coupon running for MM Funded at the moment, just for the summer holiday. The coupon is in the description down below. Summer sale, which is 40% off. But there is more than enough content for you to learn from already that's sitting on my YouTube channel. Okay, so looking at EU on the M15. Ever since that M15 shift to the downside up here of the older areas of supply, which was due for that 4-hour pullback to respect these strong lows and potentially continue targeting those weak highs, we then broke that 4-hour structure to the downside, simply because, well, we are in premium areas of supply of the daily swing range. The expectation is for the 4-hour to start shifting bearish to realign with the overall daily intention to eventually target those overall daily week lows. Okay, and all we do is we react to our structure as price moves along. So what I'm busy looking for potentially in session today is if we do get our 4 rule-based criteria that makes an S&D zone valid, is ultimately a supply zone must create a break of structure, which we took out this internal low over here. Okay, most recent strong low that took out the previous internal high. So this becomes our internal M15 strong high. Okay, M15 internal structure is all of the structure that occurs within your larger swing structure, and all of this occurring in your larger 4-hour legs. Okay. So yeah, what I would like to see going into session today is really one of 2 things. If price does form the necessary liquidity for this area of supply or areas of supply here, we can look for that liquidity sweep AMD model with the initial reaction, ideally an accumulation, then the displacement fair value gap to continue short. So this is ultimately the trade plan that I'd look at today or going into session tomorrow morning if price just really moves slowly today. If price pulls back to the supply with absolute no liquidity, I will take this as liquidity for the further up extreme supply to then look for that liquidity sweep, our 1-minute AMD model to go short and target those M15 week lows. Okay, so if we have a look at the M15 created the break of structure yesterday afternoon at about 4 o'clock. The internal then shifted bullish. So interim, while this is bullish, this is just ultimately understanding, catering for an M15 pullback. Once that internal starts to shift bearish, that then signals we're at the end of the M15 pullback. Price is now ready to target those weak lows. Okay, all price is really doing here is just creating double bottom liquidity, which makes a really nice liquidity target for the interim to continue targeting those M15 swing weak lows. Okay, so does everybody have at least a good understanding of how I approach the 3 structure types here? A mechanical rule-based way of approaching the 3 structure types. Again, if you still aren't really sure about anything, firstly, ask your questions in chat. If you're not sure about the 4-hour or why we use the 4-hour or the daily or the M15, pump your questions in the chat and ultimately also go through all of the course content that I've got here on YouTube. It's all completely free. There's no YouTube. The content will be here for as long as, well, my channel exists. So if you don't understand something, watch the videos once. If you still have questions, watch it again. You'll usually click the 3rd, 4th time after watching something that's especially completely new. And slowly but surely, if you dedicate yourself to the content for 3 to 12 months, it eventually becomes second nature. It becomes muscle memory. You will get to the point where you're able to see the structural concepts of price, where the orders and money is lying, without even having to mark it up yourself. Okay, please go into depth on the 1-minute entries. Sure thing. So all I look for on the M15 timeframe, remember, with the understanding of the higher timeframe intentions and in alignment with that, the daily and the 4-hour, is when price approaches a M15 POI, I need to see M15 liquidity build for that zone. Let me quickly just use the path tool here. Okay, so what we want to see is a clear pullback or high that is formed below the supply zone, or even vice versa, the demand zone, which then becomes liquidity or inducement to sweep into the zone, making the zone a much higher probability of holding and continuing price in the expectation of structure. Okay, so this is ideally what I want to see is an initial inducement form for the supply, the sweep of the supply, which will be our draw on liquidity, with then our 1-minute entry confirm, which what I look for is the initial reaction of the supply, ideally some kind of range, a sweep of that high, then a displacement fair value gap to go short and target my relative structural weak lows. Okay, so this is what we call AMD, accumulation, manipulation, confirmation of distribution. This is another term also for Wyckoff. All right, last point of supply, UT, UTAD, sign of strength, UT test to then confirm your shorts. This can also be known as a sweep zone or a fake change of character. All of them are really the same thing. At the end of the day, they just have different terms, but it's the exact same thing. AMD is Wyckoff, it's a sweep zone, or it's a fake change of character. There's just many different terms for it. Okay, so hopefully that gives you a good understanding on how I approach my entry confirms only inside of my higher time frame POIs. Alrighty, does anybody have any questions on firstly, the mechanical way that you can start to approach your 3 structure types, and also the lower time frame executions and understanding, putting all of that together in one mechanical rule-based system? EU is looking real good for the beginning of next year. How do you know the best supply or demand zone to trade from? So ultimately in my M15 structural ranges, we have our strong high, break of structure, and our weak lows. What I do is I take my fib tool that marks out the 50%. All right, we have discount areas of pricing, premium, and equilibrium. Supply, you always want to be trading in the premium. Demand, in a bullish example, let's take this bullish order flow here. All right, break of structure, strong lows, weak highs. We take our fib tool from the low to the high. We then have premium, equilibrium, discount. We only want to be trading SND areas in the discount of the range. So we had SND here. We had another valid SND zone here in the discount. So any demand zones that form in the premium, I will not even mark out or look at. The zones in the discount of the structural ranges always have the higher probability. Then you still need to see your liquidity below or above those zones in the discount with your sweep, your 1 minute model, to then continue targeting those weak highs. Okay, so I'll break down an XAUSD, the XAUSD longs that I took about 2 weeks ago that we eventually closed this week. It was a swing trade all the way, again, with the understanding of the weekly to the daily to the 4 hour and the M15. Once everything realigned with each other, that was your confirmation or my confirmation to target those weekly weak highs. Okay, but before we hop on to XAU, everybody happy with EU? Does that answer your question on the best supply and demand zones to trade from? One other thing as well, an SND zone that makes it really, really high probability, and that makes it a high probability institutional level. It needs to create a break of structure or a change of character. It needs to have an FEG or a inefficient push. Okay, FEG, inefficiency, imbalance, all the same thing at the end of the day. Thirdly, liquidity buildup. And fourthly, unmitigated. Okay, these are my 4 rule-based criteria that makes an S&D level a high probability institutional level. So for example, the supply zone over here. All right, it's created the internal break of structure here. It has a valid fair value gap and inefficient push. It hasn't been mitigated yet. Price has not pulled back to fulfill the zone, therefore it is unmitigated. The only thing that is missing is a liquidity buildup. Price has created the break of structure, we're just having a really sharp pullback. So what we need to see is liquidity build up for the zone to sweep, to then look for our 1 minute model to take our confirm. Then that 4 together will make this a high probability institutional level. As soon as one of these are missing, the zone becomes invalid for me. Okay. When price mitigates a 4 hour demand, should you only wait for M15 confirm, or can we use the 5 minutes or 1 minute confirm? Okay, so rule based, 4 hour, you always confirm with the M15. M15, you confirm with the 5 minutes and the 1 minute, because remember, your M15 is your 4 hour internal. So just because price is busy approaching a 4 hour supply, it doesn't mean price is going to run from there, because remember, these old supplies will cater for just pullbacks because it's completely against our structural story. Break of structure, strong highs, slight pullback, weak highs. So although price is reacting off a 4 hour supply, the expectation of order flow is still to target these weak highs. So we confirm that pullback phase once that M15 starts to shift bearish with supply and control, and even then understanding that price is not going to follow through all the way to these areas here or here or here before continuing long, because the expectation is to ultimately respect these strong lows. Same thing over here. We had a pullback, weak highs targeted, new strong lows, weak highs, pullback. Once that M15 started shifting bearish, we can then confirm a bit of a pullback. Price mitigates the 4-hour extreme. M15 shifts bullish in alignment with pro trend to then continue targeting those weak highs. Okay, so a ton of traders would have been looking for shorts here, 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 all on these area supplies with the valid break of structure, with the liquidity. But ultimately, it's so important to react to what price is printing for you right now, recently. So now that the 4-hour has given the break of structure to the downside on this supply zone over here, which is the supply and the premium of the overall daily swing range, this is the supply zone that now has the highest probability, because the 4-hour has confirmed so, to have a bit of a pullback, to end this overall daily pullback, to then continue following through 4-hour pro trend to target the expectation of the daily week lows. Okay, so your 4-hour confirms your daily. Your M15 then confirms your 4-hour. Those are the three structure types together. The M15 is the internal of the 4-hour, which the 4-hour is the internal of the daily. Then your 1 minute and 5 minutes is for your confirmations inside of the M15 POIs to ultimately get that tighter risk to reward. So instead of just really looking for a 1 to 3 of these supply zones here, we're now waiting for our M15 pullback, our 1 minute model with our displacement fair value gap, to ultimately refine this from a 1 till 3 to potentially now a 1 till 15. Or if we're targeting the extreme daily week lows, how are we going from a 1 till potentially 10 to now a 1 to 112 risk to reward? And that's how you catch these tight risk to rewards, because remember, price is fractal. How structure moves on the monthly, the yearly, it will move on the 1 second, the 1 minute. Price needs to sweep that liquidity, which is your drawn liquidity, which is your weak highs, pull back, fulfill the orders through via SND, to then continue targeting those weak highs, which is your draw on liquidity. Okay, so hopefully those three rules of using your M15 to confirm the 4-hour, your 4-hour to confirm the daily, just gives you a bit of a more rule-based mechanical platform to work on in approaching your timeframes. Okay. Is longs valid after the M15 boss on EU? If sells valid if it's in discount on the M15 EU? Okay, so if I have a look at M15 on EU, the longs would have been 100% valid after these breaks of structures to the upside, pullback, break, pullback, targeting those weak highs. But as we start to approach the discount of this entire swing range, longs becomes less and less probability. And once we have that internal shift to the downside, that is then confirmation that the M15 swing is now over, the pullback is now over, we're now ready to potentially continue targeting those weak lows. Okay, so that is why I don't want to look for any longs on this market at the moment, simply because the 4-hour is bearish, the M15 is bearish. So any longs on EU is going to be phase D, counter swing, counter internal. The only time we look for phase D, I don't even trade phase D myself, is once price mitigates older areas of supply and we anticipate the start of the pullback. Once that M15 gives confirm, we now enter phase C, because looking for shorts is now pro-internal, pro-M15, but still counter swing, because at the time, this was strong lows. Expectation is to target the weak highs. So any shorts is counter swing trading. But now that the swing has shifted bearish, the M15 has shifted bearish, any shorts is phase A. Phase A being pro-trend and pro-internal. But this is where we have to keep in mind that we've just had the 4-hour break. We are potentially due for a bit of a 4-hour pullback. So that is why I said in my trade plan this morning, if we do get the pullback to these areas of supply here or here, because we still haven't mitigated discount, so there's good possibility price can take out these highs, mitigate the discounts or the premium supplies. And if we get our confirms on the lower time frames to go short, we'll execute that because it's pro-internal and pro-swing. If price continues bullish, takes out the strong highs, then we can anticipate just a bit of a larger 4-hour swing pullback still to respect these 4-hour strong highs in areas of supply here, to then start confirming our M15 time frame to continue targeting the M15 week lows and the overall 4-hour week lows and the overall daily week lows and the overall weekly week lows. Okay. So that is why I'm not going to be looking to go long on the market this morning, simply because it's counter swing and counter internal. Once that M15 strong high shifts to the upside, longs will then be phase C. Phase C being counter swing but pro internal. Phase C is the phase where you're riding the swing pullback phase, where the internal is given confirm for the pullback, but in the back of our minds, we need to keep in mind, as price starts to approach the discount or the equilibrium of the overall range, that pullback becomes less and less probability for eventually to end, to then eventually continue targeting those weak lows, which is exactly what happened on the daily time frame on EU. Okay, we had our daily break, that 4-hour bullish shift to the upside, which is our daily internal, to confirm the start of the daily pullback. But as price starts to mitigate or get closer to the discount of this range, longs become less and less probability. Now that we've mitigated premium, we've had that 4-hour internal shift confirming that this pullback is now over, we're potentially ready to now follow through daily pro trend and target those weak lows. Okay. So hopefully that gives a good understanding of when looking for execution to ride the pullback is higher probability and lower probability. The highest probability phase to be trading the pullbacks phase is immediately after that break of structure to the downside, and the internal then confirms so, and we're still a long distance away from the equilibrium of that range. Can you give a quick description of phase A to D? Sure thing. I'm just quickly going to open up the cheat sheet that I created for the members a few weeks back, and I'll put it on screen over here. Okay, so I'm going to open up a mind graph example, and then I'll open up a live example and how I use that to catch longs on XAU. Okay, so let's quickly first go over a bullish example of the different phases. Okay, so phase A, the objective of phase A, all you need to do is ask yourself, if I'm taking longs, what is the trend of the swing structure, our 4-hour? Is the highs weak? Are the highs weak? Are the lows strong? Are the lows weak? Or are the highs weak? So if you're looking for longs in a bullish market, those longs need to be pro swing in alignment with the 4-hour. And also pro-internal. Once that M15 has shifted bullish, we now have the expectation to target those weak highs. So longs is in alignment with both the M15 and the overall 4-hour structure. Okay, so if we go through the daily structure, daily break, daily pullback. Once this 4-hour started shifting bullish, any longs here is phase A, because the 4-hour has realigned bullish with the daily. Okay. Phase B is when we're looking to long, we still pro swing, but counter internal, meaning the internal hasn't shifted bullish yet to confirm the end of the pullback. When trading phase B, we're anticipating the end of the pullback. Okay, so if I come over to an example over here on EU, all right. As price is busy pulling back into the premium of this entire swing range, daily expectational order flows to target these weak lows. Any shorts before the 4-hour swing break to the downside, if we're looking for shorts here or here, would be phase B. Because taking shorts is pro swing, the expectation to target the weak lows, but the internal hasn't shifted bearish yet to confirm the end of the pullback and the realignment of the overall swing structure. But now that the 4-hour has shifted bearish, it's realigned with the daily. So looking for shorts is both pro swing and pro internal, which is phase A. Okay, so that is why, which will take us to phase D. We'll do phase D first, then come over to phase C. Phase D is when we're trading a market that's counter swing and counter internal. So any longs on EU at the moment would be counter 4-hour swing, because the expectation is to target these weak lows. The M15 is bearish, so we're trading against the M15. We're trading against the M15 trend, meaning we both counter swing and counter internal. So phase D is usually when price pulls back to older areas of demand here. So as we're moving, okay, looking for any longs before the internal has shifted bullish would be phase D, because the internal hasn't confirmed the start of the pullback and it's still counter swing. But as soon as price mitigates older areas of demand or supply to confirm the start of those pullbacks, and that M15 shifts bullish, we then shift to phase C. After that M15 break, we now have M15 strong highs, which has now confirmed the start of the overall pullback. Then we can expect a bit of a pullback to play out, which is 100% valid to look for those longs in the interim before we then start realigning short. Okay, phase C is actually one of my favorite setups to trade, is trading the overall swing pullbacks. So hopefully that gives you a good understanding of the different phases, the phase A to D playouts of price. And I want to quickly show you a live example of XAU, and we'll actually go onto the chart now and break this down. So very similarly to this playout over here, XAUSD had our 4-hour break, mitigation into older areas of supply. So any shorts in this area of time here before that M15 break to the downside would be phase D, because you're shorting a market that is against the trend of the counter, or against the trend of the swing, and also counter trend of the internal. But as soon as the M15, which is our 4-hour internal, shifts bearish, that then confirms we can expect a bit of a 4-hour pullback phase. All right, M15 break, M15 pullback into supply to go phase C shorts, which is pro-internal, but still counter swing, because remember, the overall expectation is to eventually target these weak highs. We had that pullback, mitigation into the extreme of the overall 4-hour swing range. Now, as price is slowly but surely approaching the discount, we can start expecting price to go long. So that's where, as soon as we mitigate the extreme of the 4-hour demand, but the M15 hasn't given confirm yet, we are in phase B, because we're looking for longs, which is pro swing, but still counter internal. But as soon as the internal shifts bullish and gives that confirm, we then shift to phase A, both pro swing and pro internal. All right, weak highs targeted, pullback, weak highs targeted, pullback, and eventually the overall 4-hour swing weak high was targeted. Okay, so hopefully that just gives you a much clearer understanding of the different phases, which can actually lead us to head over to XAU USD. So immediately, if I just quickly come back to the daily, and again, this is a market we discussed way back in early September, even when we were taking shorts over here in July, riding a bit of that weekly pullback. Daily was bearish, 4-hour shifted bearish. We're looking to target these weak lows, but understanding as price starts to approach the discounts and the extreme of this entire swing range, we can eventually expect that bullish shift to then follow through the overall weekly structure and target those weak highs, which is exactly what we've seen since this daily break of structure to the upside. So the longs we got involved in was after this daily break, the pullback, that internal started shifting bullish, which was beautiful phase A confirmation to target these weak highs and the overall weekly weak highs. Okay, so from the daily, we can hop over to the 4-hour, previous daily break to the upside, 4-hour break to the downside, just signaling the start of a bit of a daily pullback. The eventual expectation, even though this was a 4-hour strong high, at the time, this was actually also a daily weak high. But as soon as this internal started shifting bullish, realigning with the daily and the weekly, this was the areas where we executed our longs to target those overall weak highs. Okay, so if I come over to the M15, or quickly before I do that, we've now created, well, on the weekly, we've just had a liquidity sweep. We haven't had the break of structure. This candle in the next 3 days would need to close above this high in order to make this a new strong low, weak high, expectation again, bit of a pullback to then eventually continuing follow through to target those weak highs. Okay, but since price hasn't created the weekly break of structure, this still remains as our strong low until we create that break of structure. And the lowest point after that pullback will then become our next strong low. Okay, so let's quickly head over to the M15. So we've now had our 4-hour break, our daily break, and our weekly liquidity sweep. So yes, at this point in time, yesterday morning, we were at this point in time here. The M15 was bullish with our M15 strong lows, M15 weak highs, but we could expect the M15 to start shifting bearish to confirm the start of the 4-hour larger pullback into 4-hour areas of demand, to then eventually potentially continuing bullish to target those 4-hour weak highs. So although this is a M15 strong high, it's still a 4-hour weak high. Until that 4-hour shifts to the downside, we can then expect a much larger 4-hour pullback to then follow through the 4-hour pro trend, because if that 4-hour strong low breaks to the downside, our entire 4-hour swing structure shifts, making this strong highs, weak lows. The expectation will be a bit of a pullback to then eventually continue targeting those weak lows. But we don't need to worry about this until price gets there. We'll react to price when this and if this even starts to form. But as price is now, and if we react to price as is now, the expectation is to pull back at least into the discount of this entire swing range. Once our M15 starts to confirm shifting bullish, we can then look for those phase A longs to eventually continue targeting those weak highs. Okay, just to quickly recap, the longs that we took on XAU was way back on the 23rd of November. Again, as per the rules, M15 started shifting bullish, aligning with the 4-hour and the daily, aligning with the 4-hour and the daily, signaling there we go. I think we're back.